So, hi guys, welcome back. Today we're going to be looking at the Evergrande debt crisis and its implications for the broader markets. For those who don't know, Evergrande is a property developer in China. It's the second largest property developer in China, and recently they have succumbed to a lot of debt. And this has caused the stock price to go down more than 90% over the last year. So we're going to be looking at its implications for the global scale, its implications in the Chinese property market, whether this company will be able to pay off its debt, whether the Chinese government will bail out this company, and some certain sectors to stay away from, especially financial, construction related, and property related companies in and around Asia and other neighboring countries. So if you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So what is China's Evergrande Group? So Evergrande is a behemoth development company based in Shenzhen, in southeastern China. It mainly rose to prominence constructing homes and apartment buildings as the company began to introduce private home ownership. It sustained itself on an appetite for expansion and a constant flow of cash through payments from consumers and other prolific borrowing. It was founded in 1996. It owns more than 1,300 developmental projects in more than 280 cities and has expanded into other major industries as well. It owns an electric car maker, a mineral extraction group, a soccer team, and even a theme park as the company grew and matured. So what exactly is the trouble that Evergrande is in right now? So Evergrande is over-leveraged, which basically means that it holds too much debt. More than $300 billion worth of debt is owed to other companies. The company has pre-sold more than 1.4 million apartments worth more than $200 billion that it has not finished building. And it has begun paying its bill by offloading unfinished projects to contractors such as construction companies or painters. However, this offloading of unfinished projects is not actually that efficient when it comes to raising capital, as not many people want to buy unfinished projects and contractors are less and less likely to buy unfinished projects, especially when you're looking at projects such as home construction, which is quite expensive and has a very big labor cost. And on top of this, they are able to sell it. They're basically forced to sell it at very, very cheap prices, which basically means they're losing out on a lot of revenue that they could have made in order to pay off all of this debt. So for a while, Evergrande's debt was not quite a big issue to Chinese regulators, who said by Bill Bishop, who writes in a Sinocism newsletter. And then it was. Chinese President Xi Jinping in 2018 unveiled 3 tough battles for the nation's regulatory state: poverty, pollution, and financial risk. Then in 2020, regulators imposed 3 red lines on developers and their borrowing habits, and the more over-leveraged a developer was, the less regulators would allow it to borrow. So what were the 3 main regulatory things that were put in throughout 2020? So as I mentioned previously, in 2020, the government imposed 3 red lines on certain developers to help curb debt levels and forcing them to deleverage. These 3 red line policies include a 70% ceiling on all liabilities to assets, a 100% cap on net debt to equity, and a cash to short-term borrowing ratio of at least 1. So this resulted in Evergrande unsuccessfully trying to sell off some of its business, which was evidenced by a leaked letter from Evergrande to the government in September of 2020, asking for assistance as they faced a cash crisis, which sparked investor concern. An estimated 2/3 of Evergrande's obligations are to homeowners who prepaid for close to 1.4 million residential properties that remain underdeveloped. The government has also begun working to control housing prices, which could further impact developers' returns and ability to pay off their debt. Housing is a key source of household wealth in China, and if the government succeeds to curbing this residential property prices, existing mortgage holders would lose a lot of equity on their homes. Household debt now stands at 62% of GDP in China and has largely been acquired through residential mortgages, and this is one of the reasons for such a large amount of Evergrande debt. So, will the government actually bail Evergrande out, and is the company too big to fail? So both Shane Oliver and Daniel Iseur say that the Chinese government will attempt to restructure Evergrande's debt. I am not sure how much I believe or agree with this statement, While it is true that quite a few people are saying the government will try to at least help Evergrande and to restructure or pay off or bail out some of their debt. However, the whole point of the 2018 and 2020 increased regulations was to send a message to companies that this is not where you want to be. Evergrande was caught on the wrong side of the regulations and is now suffering. So it is currently a balance between the Chinese government wanting to set an image for their companies to follow versus the government trying to make sure that it doesn't cause a dominoes effect and start sprawling massing sell-offs and hurting the rest of the Chinese economy in between. So I think the government will, to an extent, try to bail out some of Evergrande's debt, but most of the time they will let Evergrande try to fend off for themselves because they are trying to send a message to quite a lot of the private companies, and they don't want to incentivize companies to take on more debt only for them to come back to the government and ask them to pay it off. So global banking giant Barclays China team also points out that most of Evergrande's roughly $2 trillion or $419 billion in debt are domestic, unlike, for example, the Lehman Brothers global exposure back in 2008. More than 50% of the $1 trillion is accounts payable and acceptance bills, they note. Another US 42 billion, which is 14% of liabilities, is wealth management products, which is sold to retail investments and mainly consists of Chinese households. This could be a source of social trouble in the event of large-scale defaults, as Chinese authorities have bailed out some wealth management products in other cases, but each case seems to be handled on its own merit. So there is quite a big case to be made that this won't cause something like the 2008 GFC, where the Lehman Brothers had a lot of global exposure, while majority of this is held within China itself, close to 50%. So once again, I don't believe this will go back into a global crisis, but there will be some domino effect into other markets, primarily Asian markets, and countries that trade heavily with China, and we'll be going into that later on. So what do experts say is at stake for China? To be brief, a lot. Close to 1 million Chinese home buyers purchased apartments from Evergrande, and the company apparently no longer has the means to finish the building. Those flats are likely to be completed, experts say, but that could take time, and regulators may have to aid the sale of those projects to other developers. Evergrande's crisis pierces the veil of the Chinese real estate sector and the artificially valued tracts of land and development projects. Experts say that this could depress existing home values, which could dampen the Chinese consumer spending, and this consequence could reverberate worldwide. Chinese homeowners view their property holdings much like American homeowners do. It's one of their largest investments, and as it grows in value, their long-term economic fortunes improve. And if it shrinks in value, Bishop said, people will feel poor, and this is a chance it could start somewhat of a prolonged shutdown. So what does this mean for the global markets? So on Monday, the global markets plunged on Evergrande's developments, with the Dow Jones down 971 points before it's cutting its losses to 614 points, which is almost a 2% drop for the day. The Hang Seng Index in Hong Kong skidded more than 3.3%. Meanwhile, gold was up 0.8%, and that is a good reflection of the trade jitters that are happening all around the world. So will this shock is it likely to go global? So while properties may seem expensive in the US following the last year's surge, properties are a lot more costly in China, as Chinese buyers have led foreign investments in US homes over the past decade. Research from the University of Pennsylvania indicates that this has contributed to a disconnect between home price growth and wage growth in many US cities, particularly California. More recently, Chinese firms have been aggressively buying US farmland, and on the other hand, US investors are significant buyers of Chinese equities, with a combined nearly $1 trillion of combined assets. However, US investors cannot truly own Chinese firms, and the CCP is now making efforts to curb foreign investment. Due to trade flows, issues in the US economy are more likely to hurt the Chinese economy rather than vice versa. Even there are significant interconnection between China and the US, other countries' financial systems. Of course, the US financial system has its issues. The risk factors include near record equity valuation, minimal remaining individual sideline cash, goods and labor shortages, and immense recent corporate debt growth. But all that is missing is a catalyst, and that will bring these issues to light. In my view, the problems facing China's property sector are large enough to do so, as implied by the widespread declines on Monday. To recap what was just said here, there is quite a cross connection in between the US and Chinese financial systems and their investment systems there as well. Overall, if one were to be hurt, China would take the majority of the brunt rather than the US, because of how the trade interconnections happen in between these two countries. The US financial system does have quite a lot of issues which could be brought to light by this Evergrande crisis. But I don't think it'll have that big of an effect, and I think primarily all of this effect will be situated near Asia and a lot of Asian countries in Southeast Asia and Asia as a whole. So why would it matter if Evergrande collapses? There are several reasons why Evergrande's problems are serious. Firstly, many people bought property from Evergrande even before the building work began. They have paid deposits and they could potentially lose money if it goes bust. There are also countless number of companies that do business with Evergrande. Firms including constructions and design firms and material suppliers are at risk of incurring major losses, which would force them into bankruptcy. We'll be talking about this later in the video. And the third is the potential impact on China's financial system. The financial fallout would be far-reaching. Evergrande reportedly owes money to 171 domestic banks and another 121 other financial firms. The Economist Intelligence Unit, Maddie B. Kink, told the BBC. If Evergrande defaults, banks and other lenders may be forced to lend less, and this could be lead to what is known as a credit crunch when companies struggle to borrow money at affordable rates. A credit crunch would be very, very bad for the world's second largest economy, because companies can't borrow and find it difficult to grow, and in some cases are unable to continue operating. This may also unnerve foreign investors who could see China as a less attractive place to put their money. So some of the biggest stocks hit by China's Evergrande collapse, primarily Chinese companies. As I mentioned, much of the shockwave will be in between China and Southeast Asia. But if you look here, Marathon Digital Holdings was down more than 6%, Riot Blockchain was down 5%, MicroStrategy was 4% down, Coinbase Global was down 5%, Hut 8 Mining was down 13%, Bitfarm was down 13%, Silvergate Capital was down more than 7%, Bit Digital was down 13%, Grayscale Bitcoin Trust was down 8%, Alibaba was down 5%, Baidu was down 5%, Neo was down 6%, and DD Global was down 7% this Monday. On top of this, it has also had quite an effect on India's market, especially the steel and metal stocks. So if we go down, some of the top losses in the steel manufacturing and chemical industries in India include Tata Steel, National Aluminium Co., NMDC, JSW Steel, and other large steel and chemical companies that have taken quite a big brunt due to this. On the global scale, some of the largest steel producing companies include China's Baowu Group, ArcelorMittal, HBIS Group, Shangang Group, and Nippon Steel Corporations. I think at least 4 of these companies are situated in Asia, including Japan and nearby companies. And all of this combined, I believe some of these companies would be the ones that would take the largest brunt from the reduction in construction specifically. Other companies that would take a brunt would also include cement companies, which is used in-house in building houses and residential property. So Holcim is the largest cement company. It is headquartered in Switzerland, but it also exports quite a lot, especially to China, which is one of the largest property markets in the world. Another one is Anhui Conch, which is the largest cement manufacturer in China and the second largest in the world, they would also take quite a big hit. China's National Building Materials, CNBM, is also one of the largest cement companies that I believe would take quite a big brunt. And the rest of these as well, I believe, would take quite a big hit, especially the ones developed who sell primarily to Asia, and China would take the biggest brunts here. So when we go here, on top of this, lending real estate companies in China as a whole, not only Evergrande Group have quite a lot of debt, so Country Garden Holdings also has quite a significant amount of debt, quite similar to Evergrande Group, but they have been able to pay off their loans and their debt over time. I still believe it is quite risky, so I wouldn't recommend investing into many of the Chinese real estate companies there as well. So this brings me to the end of the video. I hope you enjoyed. Today we looked at the effect of Evergrande on the global market, whether the Chinese will actually bail them out, and primarily the steel, real estate, and cement companies and chemical manufacturing companies that have been most affected, primarily in and around Asia. So I believe much of US, Australia, Europe will not be affected too much. But some of these companies in Asia, I wouldn't recommend investing. On top of this, banks as a whole, as I previously mentioned, 171 banks in China and 121 financial institutions on the global level have lent money to Evergrande Group. So once again, for at least the next few months, at least until 2022, or until this subsides, it could be a few weeks, it could be a few months. I wouldn't recommend investing into financial institutions, as they have been quite large global companies who have invested or who have lent money to Evergrande Group there as well. So this brings me to the end of this video. I hope you enjoyed. If you did and you made it all this far, do comment what you think about this, companies that would be affected, or whether you think the CCP will bail out Evergrande Group. If not, thanks for watching anyway, and I'll see you in the next video. Bye.